The gold market is starting off the week with a sell-off. Chris Vermeulen, chief market strategist at thetechnicaltraders.com, is here to break down what's going on. Chris, welcome back. It's been a tough couple of weeks for gold investors, hasn't it?
It has been. It's been a wild few months, actually. But the last couple of weeks with the vaccine news, man, it's been definitely tough.
Yeah. What happened today? Was it more vaccine news?
Yeah, it's been a wild ride for gold the last couple of weeks. We've got the vaccine news that came out there earlier in November and just clobbered gold over the head. And really, gold was struggling before that because it had such a strong run, and it's taking a breather. But now it's getting beat up a little bit with a couple hits of the vaccine actually doing damage to the price of gold.
So, Chris, let's take a look at the charts. November 9th was the first day that Pfizer announced that their vaccine was 95% effective, and gold really dropped 4 to 5% that day. If you look at what happened the day before, it looks to me like it was a little bit overbought. So maybe that drop would have happened anyway. Do you agree or disagree?
I disagree in a way, simply because we were actually seeing the entire precious metals market start to break out. And if we were to look at the recent highs and draw a trend line across those highs, we actually saw gold have a nice big breakout. We saw gold miners break out, silver miners, silver. And so it was broad based. I mean, we were seeing the whole sector move. So I think it was on its way to actually start a new significant rally. And in fact, the silver miners ETF was the strongest sector in the market at that point. And that's a really good sign, because I like to use a strategy called BAN, best asset now. And we always look for the leading sectors, and you want to get in those because they're the ones most likely to take off. But obviously the vaccine news came out, and that obviously took a lot of fear right out of the market, and people just dumped the metals because maybe there's not going to be as much stimulus now, and devaluation of the dollar. So I do think the news really kind of halted that trend and reversed it back down. And obviously, we have more vaccine news today, and gold down sharply. So it's beat up. I thought it was ready to go. Maybe it needs more time. I think gold still has more downside. Technically, it hasn't hit its measured move yet.
Right. So that's the question that I want to ask. Well, the question everybody is asking themselves right now is, can gold go any lower?
Right. So I'll just draw a Fibonacci extension here to show you where we've been looking for gold to reach, all the way from back here. Right from to this high. So originally we are looking for a pullback somewhere right around to the 810 mark. You can see 810, this green line. The one means it's 100% measured move based on this sharp sell-off all the way down to here, the sharp rebound. That gives you an idea of the momentum and power. And so we're working our way down to this level. And ideally, if gold could tag that level, it could be a very significant turning point. I mean, when you look at the big picture of gold, I mean, we've gone from this series of kind of a bear market to it built a base and then launched to the upside. And where we are now is it's built this massive base, it's broken to the upside, and it's really having its first really significant, or I guess it's its second significant pullback to a major moving average, which is the 150-day moving average. I would say it's equivalent. This level right here that we're at today is equivalent to this type of play back in 2010, where we've broken out of this multi-year base. We've had the first rally up, and it's starting to make new highs. And so I think it's primed and ready actually for a very big move. But the markets won't bottom until people give up on it. They get scared out of it, and that's when it bottoms. And we're seeing that kind of fear in the market this week, which is really exciting.
Okay, so Chris, momentum in the short term, I'm talking about the next couple of trading sessions, is that more to the downside or the upside, you think?
I think we're still going to see some more to the downside. I think we could see this chop around a little bit, try to get down to that 1810 level. Ideally, we hit that level, because usually when you hit a measured move, you see a very sharp reversal off there. So it's going to be choppy. I'd like to see a little bit more. I think there's enough fear today that when the average investor or trader goes home, they're going to see it in the news and go, oh my gosh, gold's tanking. I got to sell my position. So I think tomorrow we see the market probably gap lower, or at least sell off for one more day as the masses kind of exit in pure fear. And hopefully that'll put a bottom in around 1810. So we'll just have to see how it goes. But it's going to be choppy probably for a week or so.
It's interesting because the VIX index is actually down today. because if you look across most equities indices, except for the NASDAQ, the Dow is up, the S&P 500 is up. The only thing pulling down the NASDAQ are work from home stocks like Zoom. So equities are actually having a pretty good day if you discount the NASDAQ.
Yeah, and we've been seeing the money slosh around between kind of the technology stocks versus kind of the economic stocks. So we've been seeing the Russell 2000. It's leading the way. It's the strongest index right here. And when the small caps are leading the way, that's a sign that people think we're in a new bull market. They're comfortable with what's going on. They're dumping money into these leveraged plays. And so one day we see everything go into technology. The next day we see it go back into the small caps and the industrials. So it's sloshing around, but definitely with the vaccine news, people are thinking, hey, we might get back to real business, small businesses, and this economy, people are feeling more secure about it, looking forward long-term. And that's why they're moving higher. And that's one of the reasons why gold is moving down is because, hey, we have a little bit of certainty that it's not the end of the world. We've got vaccines and it's just a matter of time. It might be some rough waters over the next 12 months to get the vaccine out to everyone. And with the economy slowly closing off because COVID's rising. But I mean, looking beyond that, we should be saved, right? So, and that's why we're seeing gold pull back at the moment and we're seeing stocks move higher. I've
observed a stronger correlation between gold and the US dollar versus gold versus the VIX. So can we take a look at the US dollar?
I have a US dollar ETF on here, which mimics it to some extent. And the dollar's been trying to put in a bottom here. Obviously, we had the big spike back here in COVID. The dollar spiked up in value, and it's been floundering. And we really need to see the dollar break out. Actually, there's a really good chart here. If we look at the monthly chart of the US dollar, this doesn't go back all the way. But if you go to a long monthly chart, what we're seeing here with this big blow off top and this multi-month bear flag is the dollar is actually poised to move sharply lower down to around this 23 level. And we have a very similar topping phase that we saw back in 2000. And 2000 had a very similar sell-off with a 4 or 5 month sideways bear flag. And the breakdown of that is when gold went absolutely ballistic in like 2000.
Can you zoom in on the last bit of that chart here? Yeah, so it's kind of bottomed here, but it's kind of picked up strength. Is that what's causing a lot of the gold sell-off in the last couple of trading sessions here?
Yeah. So this is the monthly chart. If I
okay, let's go to the daily here.
Yeah. So here's the daily. So the dollar opened lower today, but it rallied up, had a really good push up this morning, and it is positive on the day. And we're at a support level. If you look where the dollar has hit over the last few months, it's at support. So people are thinking, hey, if the dollar finds support here and starts to rally, it's going to be tough on metals. And that's why people, I think, are overly sensitive today because the dollar's bouncing, it's at support. And the big question is it going to have follow through and continue to rally, which will put downward pressure on metals? But at this point, the monthly chart is very bearish still for the dollar.
So if I understand correctly, going back to the gold price, you're anticipating a little more downside momentum in the next few trading sessions. Can you recap the support level one more time and then give us your forecast for the upside?
Sure. So I'm looking for gold to bottom out somewhere 1800, 1810. And the reason I say 1800 is probably see some type of washout spike low. And 1800 is a whole number, meaning 1800, 1900, 2000. Those are levels where people naturally are going to say, hey, if it drops to 1800, I'm going to buy it. You don't see, a lot of people saying if it goes to 1810, I'm going to buy it. So
well, couldn't they also say it's at 1800? That's broken. That's a trend line for a bearish move. I think I should sell more because it's going to go down more. Could they not say that as well?
Maybe if it breaks below and closes below 1800, they could have that view. But when you're a long-term investor, you're not looking for a 1 day or a 1 week kind of pivot through that price. I mean, that's for short-term traders. As an investor, you're looking for it to find support there over time in reverse direction versus it just kind of poke through it. When you look at this bigger chart and we go off the lows here that we saw back in March, there's a lot of upside potential in gold. If we were to use Fibonacci extension to give us a momentum move, and we'll use 1800, 1810 as our low, expecting it to pull back a bit more, it gives us our upside target for gold, which is around 2440. And that's a measured move between this low, you get a rally up, a consolidation, and then you see the second half of that rally. So I think there's a lot of upside potential. Obviously, gold needs to turn around for that to happen. But I mean, this 1800, 1810 is really critical in line in the sand. If that's broken, I would definitely, and it holds below there on a weekly basis, I would say we may have topped out here, and it could go quite a bit lower, back down to the 16 or 1500 mark. So we really do need to see this level come into support, or all this upward momentum over the last year is going to flip, and it's going to wash out to the downside.
So when you say that it's primed for a move, it could really go either way, depending on a lot of different macro variables. Is that correct?
Yeah, there's a lot of different things that could potentially trigger it. But at this point, it's still a very bullish pattern, and it's coming down to a very important support level. So I'm very positive on it. I think it's looking really good. But again, if it breaks and closes below 1800 on a weekly basis, you really got to be cautious. You don't really want to be long it as a short-term trader, because it could actually sell off quite dramatically in the short term.
Yeah. So as a short-term trader, what would you be doing right now?
A short-term trader, I'd be looking for 1810, 1800. I'd jump in at the level, check to see if we're going to get a sharp bounce and rebound. If we can get back above more or less 1892 or 1900 really quickly, because I think it could bounce very quickly above that level, then you're off to the races. But if it flounders around this 1800 mark and just trades sideways, if it breaks whatever the first low is around 1800 or 1810, then I'd be getting out of it, because it could actually really wash out to the downside and pick up a lot of speed as there was a mass exodus out of that play.
What news items are you looking for? What headlines are you anticipating that could push prices up to 2,400, like you said, or potentially even down to 1,600?
Right. So I think COVID's going to wreak havoc. I mean, really, the stock market's completely ignored COVID, even though it's getting worse around the world and across America. I mean, the stock market's not showing any signs of that. And I think everyone's kind of caught up with elections. They're caught up with the stock market soaring, and they're just kind of trying to ignore the negative news. But I think it's going to catch up. And when things start closing down even more than they are, it's when it starts to impact, that's when we're going to see, I think, metals do really well. I don't think the metals are going to crash like we saw in the last initial pandemic wave. I think they're actually going to soar, because it means tons of stimulus. We know it's not the end of the world, so people aren't going to liquidate their best positions, which are going to be gold going forward, I think. And so I think it'll do very well. But we really need kind of COVID to come back, I think, to give life back into it, unfortunately.
Chris, I'm looking at that chart here, and I can't help, if you zoom out for gold, I can't help but compare this to 2011, when we saw a high and it retraced and it never went back to its previous high, right?
Yeah, so let's take a quick look here. 2011. So it rallied up, and this is the type of move that I'm concerned about here. Let me just zoom in a little bit more. We get this kind of potential mass exodus where everyone is really bullish on it, but overall, if this starts to break down, we could see a pretty sharp collapse in price. And the reality is, at this point, we're pulling down to a really critical support level on the chart, and we might, if we do break down, we're going to go into probably a very long consolidation, something that lasts at least a year or so. And the stock market could just keep on trucking higher while gold flags out into something large like this. And then the big question will be, which way does gold break eventually? Does it break above the pattern, the sideways range that it could make? Whichever way it breaks from that range will be a big move going forward. So I do think we could be in for some choppy water. If we look at this pattern in gold, we've got a pretty big range here. I mean, we've got this high. You could argue you could go to roughly these highs and this 1800 low. It could chop around and consolidate for quite a while in here.
Can you give me a macro case as to why gold this time is not like 2011?
Well, we're starting in a major super cycle. To me, we're a lot more like the 2002 type of scenario where everyone is bullish. Everything is in a bull market. Everyone wants real estate and stocks and technology. And that's very similar to what it was back in 2000, 2002. And there's this big super cycle at play that I did a report on. And we are right back at that same scenario. Everyone's in real estate, everyone's in the stock market, heavily in technology, and metals and commodities are completely out of favor. And so we're at this big turning point where I think we could eventually see gold and commodities perform very well. You always see these new emerging trends happen when the masses aren't expecting it. I mean, right now, I think most traders, especially newer traders, think that technology is kind of the new norm, and that we should see these big volatility moves in the market all the time, and they love it. But that's not the reality. Reality is the market goes in cycles, and right now we're at one extreme. We're stretched in one way, and it's going to recoil and go back the other way. So I think just long term, we're starting this big. You could argue it's a 10 or 20-year super cycle. And really, there's going to be a rotation back into commodities, and with the uncertainty of what's kind of going on, I think they're definitely going to firm up. The amount of printing worldwide, the currencies are just going to keep devaluing, and it's kind of just the big picture of where commodities I think are headed. Just naturally, they're going to want to go higher.
Finally, last time we spoke, you had a bullish outlook for the GDXJ, the Junior Gold Miners Index. Do you still hold on to that view?
I do. I mean, right now we're not in the gold miners because they're in a downtrend. They're making lower lows. Last week they made another lower low. So right now they're out of favor. They still have a very bullish pattern. We got a strong rally, a bull flag pattern, which points to much higher prices, but it's got a lot of work to do. I mean, it's got to start to rally up. Ideally, we'd like to see it get above this 60 level because it's made so many lower lows and it's below the 150-day now. It's really got to rally back up and pierce this 60 and then potentially build a launch pad or a bull flag pattern for it to start to go higher. So right now, I mean, I'm not one to really be bottom fishing and pick bottoms, but we've got this kind of channel to the downside for gold miners. It's at the lower end of his channel. I feel like the metals market is trying to put a bottom in right here. But again, this could still oscillate. So we really need to see this break this kind of high level, right across this area right here. And then from there, we need to see it chatter around and hold up. And then when it starts to break from there, I think it'll be off to the races. But the gold miners have an uglier chart than the silver miners. So that's kind of where we stand with those. We got to wait for the breakout and not try to pick a bottom. Bottom fishing can be great, but most of the time you never nail the bottom and you usually get shaken out. Because it usually continues lower. It's in a downtrend. So it's more likely to continue down at this point than it is to reverse. So you're better to wait for that reversal.
All right, Chris, great talk again today. Thank you for coming on.
Yeah, thanks, David. Anytime.
I'll speak to you again soon. Thank you for watching Kitco News. Stay tuned for the latest price updates. I'm David Lin.